Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Scott Kefer, Senior Portfolio Manager with VictoryShares and Solutions. The VictoryShares ETF platform has been on the rise, both in number of products and in asset under management terms. Ticker symbol VSMV, the VictoryShares US MultiFactor Minimum Volatility ETF is one of which that has reached its 5-year anniversary. Scott, it's great to see you as always. Welcome back to Trade Talks.
It's great to be back, Jill. Nice to see you.
Thank you. And why should investors consider a minimum volatility approach?
So strategies that seek to minimize volatility are going to offer the potential for higher risk-adjusted returns over the long term and potentially a smoother path to capital appreciation over time. And they're going to achieve this by attempting to minimize the punishing effects that equity drawdowns can have on long-term returns. So investors have sort of been trained to believe that risk and returns are correlated. In other words, that to achieve a higher return, you have to take a higher level of risk. Low and minimum volatility approaches really challenge that assumption. And again, these strategies are going to seek to minimize the volatility, which means they may forego some of the upside during periods of rising markets, but when markets correct, they're going to attempt to minimize the downside participation. And by minimizing that drawdown, they have the potential to still compound at a higher rate over the long term.
Scott, what's the difference between low volatility and the minimum volatility?
It's a great question. So the way I think about it is a low vol strategy really has a singular focus. Simply buy a basket of stocks that have the least amount of volatility. But given that single pursuit, they're going to often forego other important considerations like portfolio diversification or the fundamentals of the low vol stocks that get selected. So for example, the S&P 500 low vol index is simply going to select the 100 stocks from the S&P 500 that have exhibited the lowest realized volatility over the trailing 12 months. Now, oftentimes the lower areas of lower volatility can be concentrated in specific sectors like utilities or consumer staples, for example. So at times that index could have upwards of 40% of the portfolio in just those two sectors. Now, a minimum volatility strategy, on the other hand, is going to typically layer in additional constraints, such as sector limits, for example, to provide more diversification. So as a result, it may not be the least volatile solution, but it still seeks to minimize overall portfolio volatility. So, in other words, once you add these additional constraints, you're often no longer considered low vol, you're considered a minimum volatility solution. And what's ironic, though, is that over certain periods of time, the minimum volatility solution may in fact deliver lower volatility than the low vol solution because these additional constraints are intended and often do remove additional portfolio risks from the portfolio.
And I understand VSMV takes layers in other factors. Can you explain to us when you mean by a multi-factor ETF?
Sure. So yes, the index that VSMV tracks, which is the Nasdaq Victory US Multi-Factor Min-Vol Index, it's going to fall into that minimum volatility category. And again, rather than simply buying just low vol stocks, it's going to seek to minimize volatility through the portfolio construction process. So it has considerations to diversification like sector constraints, but it also takes it a step further by only selecting constituents from a list of stocks that have first passed a proprietary fundamental screening process. And the multi-factor approach that you ask about really references this front-end screen. And it's going to rank the US large cap universe on a number of factors, multi-factor, which are designed, again, to identify companies that have stronger fundamental profiles. So it'll include factors like quality factors, valuation factors, momentum factors. So that in the end, the solution is not just selecting low vol stocks. It really seeks to minimize volatility of a diversified portfolio of companies that are deemed to have stronger fundamental profiles.
So this multi-factor approach, is this what differentiates it from other ETFs?
Yes, absolutely. As mentioned, and at the risk of being repetitive, typically these low vol solutions are going to lack diversification. Other min vol solutions might address the diversification, but VSMV is really the only strategy we've seen in the min vol space that takes it that step further by applying a fundamental screen as well. So it really, VSMV really offers a trifecta of lower volatility, diversification, and fundamental screening.
How has the strategy performed in the current environment?
So you can visit our website, vcm.com, to see the standardized returns for VSMV. But generally speaking, VSMV has very much met our expectations, achieving its primary objectives, both over the 5-year now anniversary history, and particularly during this period of recent market volatility. So when you think about year to date, it's outperformed its benchmark, the S&P 500 index. It's done it with less volatility. It's done it with less downside capture. So it's been able to deliver both higher absolute and higher risk-adjusted returns than its benchmark.
And finally, Scott, how should a financial advisor consider adding it to an existing customer portfolio?
So we believe minimum volatility solutions like VSMV can be used as a component of a client's core equity allocation. In particular for an investor with a long time horizon, those that are also looking for less volatile solutions that can provide that smoother path to capital appreciation, which clearly is something we're seeing a lot of demand for in this current market backdrop. And then lastly, for investors that are already exposed to low or minimum volatility solutions, VSMV's evolutionary approach with that multi-factor fundamental screening process on the front end may prove to be a more attractive alternative to other solutions in the marketplace.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.